Welcome to the channel, guys. I trust you're doing very well. In today's video, I will be going over the 4 pairs that made it to the top of my watch list for the week. And I will be actively monitoring these pairs to get in on the trade opportunities presented me at the open of market. So right here, the first pair on my watch list would be gold. And starting out with the weekly time frame, on gold very clearly, we can see the market very clearly in a bearish structure. So we had this higher high, and then we had this higher low. We had this higher high. We had the higher low. We had the higher high, and then we had a shift in the market structure from bullish to bearish, and we pretty much started pointing lower highs and then lower low, and then with this being the most recent swing high. So we have the weekly time frame in a bearish market structure. On gold, and then taking this down to the daily time frame. From the daily time frame also on gold, we are clearly in a bearish market structure. And I know how complicated market structure can get. But then you will notice we had started pointing lower high, lower low, lower high, lower low, at this lower high, at lower low, at this lower high, and then we had this being the lower low. So now you get to understand, for as long as we stay below this previous lower high level, we're very much still in a bearish market structure. So every one of the activities playing out in this level is all just a complicated pullback. So we have this being the lower high level that led to this lower low. So for us to consider the daily time frame on gold as a bullish market would be when once we have a nice break above this level. And when I mean a nice break, I mean a well-bodied candlestick close above this level. Then we would consider that the gold structure from the daily time frame perspective has shifted to a bullish market condition. But now we're still clearly in a bearish market condition, with this being the previous lower low, lower high rather, that led to this lower low. And then we only made what? An 100% retracement to test previous swing lows, swing highs, sorry about that. And then we're back to this very level again. So every one of these, like I said, are only just complex pullbacks. So we have the weekly time frame in the bearish market condition. We have the daily time frame also in a bearish market condition. And then also from the daily time frame, what I noticed is the fact that we had come into a nice daily key level. Somewhere around 1925. Owing to the fact that looking to the left, price has tested the level multiple number of times and has seen a significant bounce off to the opposite direction. So right here, we had tested the level from the downside. Then what? Where the level acted as a resistance right about here. Where they break above the level and then a retest of the level from the upside with the level holding up as support. Right here also as support. Right here, where the level holding up as a resistance. And then here, of course, we have the level as a resistance also, support right about here. We have the level here as a resistance, right here as a resistance. And then what? We are back to the level again. But this time around, we haven't seen a very clear daily candlestick close below the level, and then a nice retest of the level from the downside. And now because we are beneath the level, looking to the left, for every of the times we're beneath the level, at the retest of the level, we had the level hold up as resistance, right about here as resistance. So you can see here we're beneath the level, we had tested the level, and then we had the level hold up as resistance. And then again, we had this nice break. And at the retest of the level also, I was expecting for price to do the very same thing it has been doing for the longest period of time, looking to the left of our charts for every of the time price tested this level. So now we're testing the level again from the downside. The very same thing that happened previously here. I was pretty much looking to happen again right about here for the level to hold up now as a resistance. And then you notice we had a nice daily rejection candlestick from the level, kind of giving me an indication that the level is likely going to hold. The level is likely going to play out as it did the previous time. Right about here, you can see as soon as we tested the level, we had a huge daily rejection from the level. And here also, we tested the level, a huge daily rejection from the level. We tested the level right here, a huge daily rejection from the level. And then again, we're back to the level. Now, once you start seeing price or repeating the very same things it did on a major level like this, a key level, looking at the major time frame, the daily time frame, then you understand that the chances of price playing out exactly as it did previously when it tested the level becomes very high. So clearly, we have the weekly time frame in a bearish market structure, the daily time frame in a bearish market structure, and then we're having price test a major daily key level from the downside, now expected to act as a resistance. And then also, we are having to confirm the potency of the level by seeing a nice daily rejection from the level, a nice daily rejection from the exponential moving average 50. Now the confluences are quite high at this very level. There's no reason why I don't want to look to sell the level. I don't want to look to sell gold when once market opens, having stacked every one of these confluences present at this exact same level. So taking this down again to, okay, then of course, I'm definitely looking to get in on shorts from this level with my take profit, anticipated take profits somewhere around 1903. Yeah, so I'll take this a bit higher, 1903. So I'm looking to get in on sales on gold from the current daily key level with a view to get out of my sell trade opportunities somewhere around 1903. A reason being that looking to the left again, guys, every of the clues you need from the markets, you have to get from previous price data. So previously, looking to the left, we have tested the level right here. As soon as we tested this key level, we had a huge sell-off. Where did we head to? This very level. This time again, we had a huge sell-off from the level, daily key level. Where did we head up next to? This very level. And even if we take this, I wanted to see how price reacted previously from that level. But then again, I wouldn't want to go too far on that. And right about here, when we tested the level, this daily key level, we had a huge sell-off. Where did we end up testing? This very same 1903 key level also. Now you understand why every selling opportunities from this level again I'm looking for right now would be potentially to add to the 1903 key level for my take profit. If I have a daily candlestick break above this level, then I would consider selling more at the retest of this level with a view to taking gold all the way to the previous daily lows. But that's not the case right about now. I'm looking to sell from this level with my anticipated take profit level at 1903, which I have established the reason why. Now we can take this down to the 4-hourly time frame. And then from the 4-hourly time frame also, what can you get to notice? Firstly, we have to establish the market structure. From the 4-hourly time frame, we add price, higher higher low, higher low, but higher right here. And then we had ourselves, this being a swing high, the highest points price got to from the 4-hourly time frame perspective. And then we had a huge sell-off, breaking below the previous higher low, forming a lower low, shifting the market structure once again from the 4-hourly time frame perspective from bullish to bearish. And then right about here, we can clearly see we have had to see price now pointed us this swing low, being the lower low. And then this looking like a potential lower high for price to continue in the bearish move to the downside. So guys, we have the weekly time frame in the bearish market structure, the daily time frame in the bearish market structure, the 4-hourly time frame also in the bearish market structure. Now you understand why I'm only going to be looking to sell gold at the open of market this week, because every of the major time frames are pointing to the downside. And now I don't sleep on these guys. Once I have the majority of my time frames in sync, I definitely would want to head in the direction of the higher time frame directional bias. So as you can see, we have from the 4-hourly time frame, gold in a bearish market condition. And then we're having to see gold now retest our daily key level, like we had established previously. Also, a nice retest of the 50 exponential moving average. As you can see, we had a break below the exponential moving average, and then we're retesting the exponential moving average, which is present at our daily key level. Now you can see the confluences at play are so much right about here. And then with the exponential moving average, in this case, expected to act as a dynamic resistance. So price is currently testing a daily key level. In this case, from the downside, a daily resistance. Price is also testing a 4-hourly broken 50 exponential moving average from beneath, expected to hold as a dynamic resistance. And then as soon as we tapped into the level, what can you notice? Lots of 4-hourly rejections from the level. Now you understand once we start seeing rejection candlesticks from a key level, an area of interest, a level where we're looking to get in on potential trade opportunities, this puts the odd even more higher. So I would suggest at the open of market, you would want to wait for a bearish momentum candlestick close, confirming that yes, the selling momentum has kicked in back into the market to get in on shorts from this level. But then if I would take this a step further, personally for me, I would want to see the 1-hourly time frame also align with every of these major time frames. And what do I mean by that? Now on the 1-hourly time frame, we were printing lower low, lower high, lower low, lower high, with this being the swing high, the lower high that led to this lower low. So for as long as we stayed below that previous lower high level from the 1-hourly time frame perspective, we are still very much in a bearish market structure. But then you would notice we have not done that. That is not the case from the 1-hourly time frame perspective. We've had a nice 1-hourly bullish candlestick close above the previous lower high level, pointing us a higher high, more like shifting the market structure from the hourly time frame perspective from bearish to bullish. Now, this is where it gets even interesting. So I have the weekly time frame in a bearish market structure, the daily time frame in a bearish market structure, the 4-hourly time frame in a bearish market structure. But then moving down to the 1-hourly time frame, it's in a bullish market structure. So personally, for me, what I would want to do or what I want to see is for price to have a shift of a market condition from the hourly time frame perspective from bullish to bearish. And what do I mean by that? Take note of this very low right about here. So you can see this is the higher low that led to this higher high level right about here. So I would want to see price come and take out this higher low, pointing a lower high, a lower low rather, sorry about that, pointing a lower low, more like shifting the market structure from the hourly time frame perspective, now from bullish to bearish, making this now very much in line with every of the other higher time frames. And then as soon as I get to see this confirmed structure shift on the hourly time frame perspective, I would love for price to have a nice retest of the hourly time frame structure level. Then I would look to get in on sales at these retests. And by structured level, I mean from the hourly time frame, this would be a structural level owing to the fact that multiple number of times, like you'd see right about here, when we tested the level, we had the level acted as a support. We had broken beneath the level. And then at the retest of the level held up as a resistance. Right about here, a resistance. And eventually we had a break of the level, support. And then we're back to the level. So I definitely would not be looking to sell right at this level because price might most likely what? Do this very same thing it did right here. Also, the very same thing it did right here. So at the retest of this level, you can see how we had a huge buying movement to the upside. Now we're back to the level. So we can still what? Either on back to the upside again from this level. That goes to explain why I'm personally going to be waiting at the open of market this week for price to have a nice bearish momentum candlestick close below this hourly time frame key level, structured level, also shifting the market structure from the hourly time frame perspective from bullish to bearish, very much in line with the other higher time frames. And then at the break, as soon as I have a nice bearish momentum candlestick close, I'd love to have a nice weak rejection of this structured level, hourly time frame structured level. Previously, a resistance. And because by then we would have to see the candlesticks below the level at the retest of the level expected to act as a support. And then also, by the time we have had that nice break of this level and at the retest of this level, or have to see that the exponential moving average from the early time frame perspective would have caught up with price somewhere around that level. So, and then what would be having is a nice retest of the 1 hourly time frame structure level from the downside being a resistance level. And then also with the fact that our 50 exponential moving average would have caught up somewhere right about here, acting as a dynamic resistance also at that very level. And at that retest, at that level, at that 1 hourly structure level, when once I have a nice rejection candlestick from the retest of the 1 hourly time frame structured level, the 1 hourly time frame 50 exponential moving average, a nice rejection or bearish momentum candlestick close would trigger my sell trades, with stop loss just above the level. And like I had established already from the higher time frames, the daily time frame, with my take profit all the way down to the 1903 key level. So yeah, this is what I would love to see for gold. I'm very much anticipating gold to head low to the 1903 level this week. I'm favoring gold selling to this level to the tune of 80% this week. And these are the very things I would look to happen before pulling the sell trigger trade for gold. And then the next on my list would be Chef JPY. So for Chef JPY, let's quickly remove the drawings and then starting out with the weekly time frame. As you know, I always want to start out with the weekly time frame just to be able to have a better understanding of where the market is headed. On Chefs JPY, from the daily time frame perspective, we're bullish. We have the daily time frame. We have the weekly time frame, sorry, in a bullish market structure. But then something very fascinating happened last week where we had a huge sell-off that broke below a weekly structured level. Somewhere around 164 psychological number. So we had this nice sell-off breaking below this level, breaking and closing below this weekly structured level. Is a structured level owing to the fact that looking to the left, we had a nice bull run, and then we tapped into the level, and then we had a nice rejection from this level, only to head up to the downside. And then we came right back into the level a second time. We had this huge rejection from the level. So we had on two occasions the level held up as resistance. And then we had a break above the level. We had tested the level 2 weeks ago. The level previously broken resistance becomes a new support. We had a huge rejection again to the upside. And then last week we had closed nicely with a bearish candlestick breaking below the structural level, more like a weekly key level, as you can see. So we have tested level 1 to 3 occasions, and then we would add huge movements to the opposite direction. Now you understand why this level for me is so important. So having seen price last week close bearish below this weekly structural level, I was anticipating for a much bearish move to the downside this week for price to come and tap into the 162,000 level. So this week, I'm pretty much expecting for price to come and tap into this level before doing anything significant, either to the upside or having a decent break below this level. But then, having seen last week candlestick closed bearish, breaking the structural level, personally for me, I would love to see this week at the open of market a nice week retest of this level to then look for selling opportunities with my anticipated take profit level somewhere around the 162,000 psychological round number level. And now at the retest of this level, weekly key level, previously a resistance, previously a support, now broken. A broken support will most likely become a new resistance. So a nice week retest of this level at the open of market this week. I will be scaling down to the lower time frames to look for confirmation entries for shorts from this level all the way down to the 162,000 level. And now that is that for the daily time frame. For the weekly time frame, taking this down to the daily time frame, now this is where you have got to understand why it's so important to understand and see the market from a multi-time frame perspective. I cannot stress this enough. Now, taking this down to the daily time frame, you can see this even more clearer. Is even more clearer. From the daily time frame, we can see something very interesting. We had a higher high right about here, a higher low. We had a higher high, we had a higher low, we had a higher high. So with this being the swing high, the highest point priced ever tapped on Chef JPY. And then we pretty much had this nice range for a couple of weeks before eventually having a nice break of structure from the daily time frame perspective. So right about here is where we have the nice shift in market structure. So we have shifted structure on the daily time frame perspective from bullish to bearish. And then we had ourselves a nice lower high that presented us a double tops. And then we had ourselves now this lower low structure that broke the weekly time frame structured level, this blue zone. So in essence, what I'm trying to establish from the daily time frame is we are in a bearish market structure. The first thing. To notice from the daily time frame. And then also from the daily time frame, you would see this level very clearly. The first time we tapped the level, we had a nice sell-off from the level. We had it tap on the level a second time, we had a huge sell-off, a third time, a fourth time, a fifth time. And then when we were above the level, we had a huge price rally from the level. And now we are having to see price break below the level. So every of the times we were below the level, and then when we tested the level held up as resistance. And now we are back below the level. We are doing the very same thing again. So every one of the things that played out previously on 5 occasions when we tested this level is what we're very much still looking to what repeat itself again. Now you have to understand the market is based on repetition. And then we have had that huge break and then a first retest of the level being a weekly time frame structure level, being a daily time frame key level. And then we have had the nice rejection from the level. I personally don't think this is gone yet. This is only a first reaction off of the level. So we've had a nice daily rejection from the level, giving me again a clue that this level is most likely going to hold. Because once we get to see rejections from a level of interest, a key level, it puts the odds of the level holding in higher chances. And not also are we having to see price retests our daily key level. We are seeing a break below the 50 exponential moving average, and then a retest of the 50 exponential moving average, and then a rejection from the exponential moving average, with the exponential moving average now also holding up as a dynamic resistance. Now again, you can see the confluences at play at the very exact level. Now, this takes us to the 4-hourly time frame. From the 4-hourly time frame, I don't need to stress this too much. You can see very evidently we are in a bearish market structure. So we had this swing low, we had this swing low, this higher lower low, this lower high rather, sorry, that led to this lower low. And then we're having a nice pullback, expecting to act as a potential lower high for that nice selling to the downside. Also from the 4-hourly time frame, you can see as soon as we retested the level, we had a huge 4-hourly rejection from the level. we had a shift in the momentum. You can see this Farley candlestick, a very nice bullish momentum candlestick. And then as soon as we tapped into the level, we had a slow, we had a doji, rejection from the upside, more dojis, and then we've had ourselves a nice bullish momentum candlestick close from the level. Then personally, for me at the open of markets, I could decide to take a first sell trade from this very level with my stop loss just above the 4-hourly highs right here. And then I can establish from the weekly time frame 162,000 level as my anticipated take profit level for nice 1 to 3 points, giving me a 156 pips on this with just a 48 pip stop loss. I could decide to go in with a lower risk on this, even though I would love to see price at the open of markets come again and tap into this level and then give me more confirmations or rejections from this level. That's what I mean by more confirmations, that indeed this level is very potent to hold in. So I think at the open of market, I would go in. I'll be going in on sales with a lower risk at current price. And then once I have a nice retest of the level again, I would scale down to the lower time frames, like the 1-hourly time frame, and then the 15 minutes time frame to consider adding a re-entry from this level. So from the 1-hourly time frame perspective, we are also in a bearish market structure, as you can see right here. So now we have the weekly time frame bullish, but then we are testing a broken structured level, weekly structured level, expected to act as a resistance. And we have the daily time frame bearish, we have the 4-hourly time frame bearish, and then also the 1-hourly time frame bearish. So again, I have the majority of the time frames to the downside. So even though the weekly time frame is in the bullish market structure, I have more of my time frames to the downside. The daily, the 4-hourly, and then the 1-hourly are all in sync. So this puts this trade also as a higher probability trade. And then you can see this is even more clearer from the 1-hourly time frame. We are testing a 1-hourly time frame structure level. We are testing the exponential moving average 50 from the 1-hourly time frame. We've had a nice rejection from the exponential moving average 50. We've had a nice break and close back beneath this 1-hourly structured level. As you can see, when we're beneath the level head up as resistance. When we're above the level head up as support. And now we're back to the level. So at the open of market this week, I think I would love to see price reject this level even more, or present me a bearish momentum candlestick close from this level. And then that would determine going in on a lower risk. And then with my take profit just here. But then again, like I said, preferably I would love to see at the open of market for price to come back again to retest this level, giving us that weekly candlestick, week retests of the level like I established at the beginning when I started with looking at the weekly time frame. So if we tap back into the level again, that would give us the weekly time frame week retest of the level, and then would be yet another retest of the 50 exponential moving average, in this case expected to act as a dynamic resistance. And once I have the rejection again from this level, 1 hourly time frame rejections, 1 hourly time frame bearish momentum candlestick closes from this level, then I will be going full risk on this, on Chef JPY with my anticipated take profits right at this level. So yeah, that's that for Chef JPY. Now the next on my list would be AUD JPY. AUD JPY would be the next on my list. AUD JPY, taking this again to the higher time frames. I would start out with the weekly time frame. So from the weekly time frame on AUD JPY, you would notice very clearly we are in a bullish market structure. So we have the weekly time frame to the upside, and then we've had a nice breakout of this counter trend line. I don't use trend lines too often, but just to be able to point out very clearly what's my overall views for AUD JPY would look like. We had a nice breakout of this counter trend line, and this is where I would consider AUD JPY to head back to the upside to the previous weekly highs, somewhere around 97,500 psychological round number level. So I'm pretty much anticipating AUD JPY to trade back to the previous weekly highs. But then, looking at the weekly time frame again, I'd noticed we had broken above a weekly key level somewhere around the 95,000 psychological round number level. So somewhere around 95,000, we had a nice breakout of a weekly key level. Now again, you can see, looking to the left, for every of the times we tested this level, we've had huge movements to the opposite direction. As you can see, we tapped into the level from the downside, and then we had a huge sell-off from the level. We tapped into the level right here, a huge sell-off, having this huge weak rejection from the level. Right about here, a huge sell-off from the level. Right about here also. Right about here, a huge sell-off from the level. Right about here, we had a nice buying pressure when we're above the level, and then we had eventually broken below the level. You sell from the level, and now we are back up above the level, guys. You have to understand that the market will keep repeating itself. Now, very much what I'm looking to happen on AUD JPY is, like I said, repetition. Looking to the left, you can see at this occasion when we had a break of the level, what did we do? We had a weak. Oh, sorry about this, guys. So I think this is my analysis from before popping up. So like I was explaining, now looking to the left, when we had this weekly candlestick close above this key level, we had the next weekly candlestick opened, and then first we had a nice weak retest of the level, and then before we continued the movement to the upside. It's the very same thing now again. So as soon as market opens this week, I would love to see price trade back to this level, give us that weak retest of the level like it did the previous time it tested the level, and then for price to continue again to the upside. Now it can't get any simpler than this, guys. It can't get any simpler than this. So I've pretty much established from the weekly time frame that AUDJPY is likely and possibly going to be heading much higher this week and the subsequent week, with my projected take profit level somewhere around the 97,600 level right about here. All I would love to see from the weekly time frame is the very same thing we did right about here. As soon as we closed the year, we had opened, and then we had a nice week retest before the bullish momentum stepped in. So again, I would love to see at the open of market this week a nice sell-off to the level, and then a bullish momentum step in with price to head up back to the 97,600 level. And that is that for the weekly time frame. So we have the weekly time frame in the bullish market structure. We have a break above a weekly key level. And then looking at the daily time frame, yeah, you can see the daily time frame is in a bullish market structure. Once again, this is the counter trend line we had established from the weekly time frame. Let me leave this here just to make this a bit clearer. So we have the sorry about that. We have the daily time frame in a bullish market structure. We have the daily time frame currently trading above the weekly key level. So like I established previously, what I will be looking to play out here at the open of market this week would be for price to trade back to the 95,000 psychological level. And then I would scale down to the lower time frames to look for entry confirmations to go longs at the retest of this level, the 1 hourly time frame, the 4 hourly time frame, rejection candlesticks, bullish momentum candlesticks at the retest of the 95,000 price level, chart patterns, inverse head and shoulder pattern, double bottoms, just to mention but a few. So firstly, at the open of markets this week, I'd love for price to trade back to this level, and then I'll look to buy from that level. And then also, because I have to plan very well, just so I don't miss out on the opportunities when once they present themselves, I'm also potentially looking for price to do something else. So we have, from the daily time frame perspective, price had come into a nice daily key level. Sorry guys, my network is acting up. So we had price had come into a nice daily key level right about here. So as you can see, when we are above the level held up as resistance, as support rather, support, support right about here. When we're beneath the level, you can see resistance, resistance, and now we're back to the level. So this could very much be the same reason why the first time we tapped into the level, we had a huge sell-off back to the level, and now we're back to the level again. And this also could be the very reason why we're having to see this daily weak rejection from the level. So when once market opens this week, like I said, firstly, I would love for price to trade away from this level to the downside and come back into this area of interest for me to then look to go longs. But if that does not happen, and then at the open of market this week, I have a nice bullish daily candlestick close above this level. Very interesting also, guys. And now because I'm very much aware that this for me is a daily key level, 95, 500 psychological round number, daily key level. At the break of this level, just like price did the previous time, we had traded above this level. The level held up as support. When once price opens and then we have a nice bullish candlestick close above the level, I would love for price to then what? Have that nice weak retest of the level to then look for potential buying opportunity to take this all the way to the upside. So I'm pretty much looking for two things when once price opens this week, when once the market opens, price sell off and then come into my 95,000 price level to go in for longs, or price right about here from this level, have a nice bullish price rally, breaking above this current daily key level. And when once price does that, it's fine, okay? I will wait for the nice retest of the level, and then I would be looking to go in for longs at the retest of this level to take price all the way down to the 97,600 price level. And now that is that for AUD JPY. And then the last but not the least on my list would be AUD CAD. Now, AUD CAD has been my bread and butter for the last 12 days, as I have caught pretty decent pips from the very move. So this is AUD CAD. And for those of you who are in my free Telegram channel, you know I did give heads up on this very move playing out here on AUD CAD. Yeah, as you can see, some about 2 weeks ago, sometime September 11th, I said AUD CAD potential sell opportunity looming, daily time frame. I'm definitely dropping down to the lower time frames for price action confirmations to go short from current key level, being the 87,600 psychological round number level, being the potential right shoulder of the head and shoulder formation. Now, you can see the timestamps right here. September 11th was when I had made this screenshot. So I'd pretty much been selling AUD JPY, taking pretty much every sell opportunities I could get from the market since September 11th. Hence the reason I said that it's been my bread and butter. Yeah. Now let's get back to what I think would be happening this week. Quickly, let me check this out. On AUD CAD, I've pretty much been short at the potential right shoulder, somewhere around here, was where I entered my first sell opportunity for AUD CAD, the potential right shoulder, like you had seen from the chart markup I posted on the Telegram channel some weeks ago. So I had my first entry for sell somewhere around this level. And then I also had myself a sell re-entry somewhere around this level. As soon as we had this retest of this level, I had a sell entry. And then I had a third sell entry somewhere around this sell movement right about here. But then what am I looking to happen this week on AUD CAD? Quickly looking at the weekly time frame on AUD CAD, you can see very clearly we are in the bearish market structure, guys. I can't make this up. Where we have price printing us lower low, lower high, lower low, and then we have this lower high that retested the weekly structure level, previously a level of support, broken, now becomes a new resistance. And then we're very much expecting for price to keep selling off to the downside. But my first take profit level, somewhere right about these weekly lows, 86,000 price level. So I'm expecting for price to pretty much come back to tap into these lows. So we have the weekly time frame in the bearish market structure, and then the daily time frame. Sorry, my network is acting up. Oh, crazy. Yeah, sorry guys, I had to quickly switch my internet. So the daily time frame clearly to the downside in a bearish market structure, the weekly time frame in a bearish market structure, like we had established previously. And then quickly the 4-hourly time frame, also clearly in a bearish market structure. And then very interesting is the fact that we are currently testing a structure level, key level. As you can see, looking to the left, for every of the times we tested the level, we had huge movement to the opposite direction. Tested from the upside, we had a huge buying pressure right about here, we had a huge price rally. we had a break of the level, and then we had a huge sell-off at the retests also, right about here. And then here, again here, also right about here, we had a huge price rally to the upside, a huge price rally to the upside. And now we are back to the very same level again. Now, this keeps getting even more interesting. So we have a nice sell-off, breaking below this level, breaking below the 50 exponential moving average, as you can see from the 4-hourly time frame perspective. 4-hourly time frame very much in a bearish market structure. And then bringing in our Fibo retracement tool from previous swing high. So the swing low right about here, you can see not only are we testing a structured level, a key level from the 4-hourly time frame perspective, as you can see, we are also retesting the broken 50 exponential moving average from the downside, in this case expected to act as a resistance, a dynamic resistance. And then also we are retesting the Fibonacci 61.8 golden reversal level. You can see the confluences at play at this very level, guys. It's a no-brainer. At the open of market this week, I would love to see a nice bearish engulfing candlestick confirming that the selling pressure has pretty much kicked in from the level to take AED cut all the way to the downside with my stop loss just above these highs right about here. But then I would want to make this even more clearer. From the 15 minutes time frame, where I would most likely be looking to go in to get my entry executions for shorts, we are having this level right about here as our structure level. Now you can see from the 15 minutes time frame, we are clearly in a bullish market structure. So what I would love to see with this being our higher high right here, higher low. This is the most recent higher low that led to the higher high, the swing high right about here. What I would love to see is for the market structure to shift on the 15 minutes time frame perspective from bullish to bearish, confirming the directional bias of the other time frames, the weekly, the daily, the 4-hourly, the 1-hourly time frames, all in a bearish market structure. So I would love to see the 15 minutes time frame market structure also shift bearish. And then as soon as we have that structure shift, I would love to have a nice retest of this 15 minutes time frame structured level. Previously, level of support now acts as a level of resistance. Also a nice retest. As soon as we have that structure shift, that would mean a nice 15 minutes time frame break below the 50 exponential moving average. And because we're now below the exponential moving average, by then, when we do have the structure shift, at the retest of the 15 minutes time frame structure level, previously broken support, now a new resistance, exponential moving average present at the level, acting as a dynamic resistance also. And then I would love to see rejection from that level, momentum candlestick closes, and then would be my confirmed entry for shorts on AUD card. Now that's it, guys. So if you want me to do this every Sunday, to come on here and then break down my best pairs for the week, to help serve as a guide for you to be able to focus on those pairs and then make the most, quickly go into the comment section and type this Kickstart Sunday breakdowns. Now, guys, take this very seriously because this will go a long way to determine if I would keep up with this for subsequent weeks. So quickly rush down to the comment section and then type this down, Kickstart Sunday breakdowns. And the more of this response I see in the comment section will determine if I would keep up with this for subsequent weeks. Do well to subscribe to the channel to not miss out on my regular dose of value. See you in the next video, guys.